I want to break down this trade that a lot of us took during the New York session this morning live in Discord. Look, my day started just like a normal trading day, just like any day does, which includes showing up an hour before the market opens, posting my ideas. You can see here, that's 8 o'clock in the morning. That's 30 minutes for the market opens, Central Time, the time zone that I'm in. I posted my plan today for the Qs and the SPY, my idea. I come up with an idea before the market opens, so I'm not improvising, I'm not chasing, and I'm not getting an itchy finger trigger. When the market opens, I'm doing all the work before. So that when the bell does ring, all I have to do is sit back, kick my feet up, and wait for the market to confirm my idea. And if it doesn't come, if the market doesn't confirm my idea, then it is a no trade day. And by doing this, by coming up with my ideas before the market opens, it takes away a lot of my internal triggers, which is seeing price move, so I have to react. I already have my plan, I have my ideas, now all I have to do is wait. And if I can't do that, then I shouldn't even be at the computer anymore. So how do I come up with the levels that I'm trading? Well, it's simple. When I sit down in the morning, I ask myself one simple question. What's obvious? Where are obvious areas on the chart that traders will react? And that reaction could be long, short, just where are people gonna push a button? And then I think, how are they taught to trade, right? Trend line break, go long. Or where am I putting my stops? Above swing highs, above swing lows. So those are the obvious areas. And I want to be clear here, as I've said, and I'm going to say it again so I'm blue in the face. So you've heard it 1,000 times. I'm not trading the trend lines. I'm trading behavior of traders around those trend lines. Where can traders be wrong? Because I want to take the opposite trade of them. So my idea was simple this morning. I want to see breakout traders pile in on a break above this London high. I want to see absorption. I want to see it stall out. I'm going to confirm with Delta candles. Did in fact more people go long than short, hitting that market buy button? The answer was yes, and a resounding yes. But I also knew we were getting some economic data this morning at 10 o'clock Eastern time, ISM services PMI, employment, business activity, new orders, and prices. So I said to myself, well, if there was ever a time that people were going to push a button, it would be when data releases, when news breaks. People get emotional and they just react. I trade the reaction after the reaction, and it all lined up perfectly today. So 9 o'clock, this is that 9 o'clock candle. As soon as that data comes out, what happened? I saw a quick spike up. I saw breakout traders chasing and price not going higher. So I saw effort, I saw participation, but they were not being rewarded for that effort and participation. And remember, with these Delta candles, and again, it wasn't on this is a TradingView platform, so it wasn't on this, but I saw buyers stepping in. The Delta was ticking up, green. People were longing, but for every buy, there's got to be a sell. That means someone was up there being filled with shorts, because for every buy, there's got to be a sell. There can't be offside traders here. There can't be 358 more longs than shorts. So what does that mean? Limit orders are absorbing. There is absorption happening here, meaning everyone's smashing long, but price isn't moving. Why? Because they're smashing long into that sell wall of limit orders. So you had a couple things. My pre-market plan, obvious areas on the chart. You had a news release. I wasn't going to smash a button until that news release hit. And then once it did hit, you had breakout traders chasing. You had stop losses being hit from the swing high back here. You had a large liquidity event taking place in the market. Somebody was getting filled. Somebody's going to be wrong here. I want to trade against whoever's wrong, because there's no better trade in the market than when stop losses are taken and there are trap traders present. And when you go long here, and price starts moving against you, you are forced to cover when your stop loss gets hit. But also think about it from a psychological standpoint, and even from a point of you as an early on trader. What happens when you're in a drawdown? You're freaking out, you're closing, you're buying back the position, but that's just forced flow, which gives us the quick move down to VWAP, which was our target this morning, to get out of the trade. Short, sweet, pulled 5 hours out of the market. Beautifully planned, executed trade based off of what? Trap traders, liquidity event, and forced flow. Now here's the best part about these types of trades is the invalidation on them, where your stop loss goes, is so clean, and they are the best entries that you can possibly get for a move. So where are you wrong? Where am I wrong? Where does your stop loss go? Goes where you're wrong. Where am I wrong here? Well, if this is going to SFP swing failure here, it's above, right? So I'm entering on the reclaim. I actually grabbed it up here. But if you enter on the reclaim, like I teach new traders, you are invalidated if it breaks above that and you risk 1% of your account, no big deal. But then if it goes in your direction, which these do, that's 3 hours, 4 hours, 5 hours, sometimes more, sometimes less, depending on the trade. But today, just everything lined up from the pre-market plan to the news, to trap traders, to yanking some R's out of a hard market right now. There is no better signal in the market than traders who are wrong. And that's what I mean when I say I'm not trading the level. I'm trading behavior around that level. I'm trading against who is trapped. I am trading in the direction of the force flow. Just to be clear, too, moves that happen fast are often fake outs. Fake outs happen more than breakouts. People chase news events. People chase, breakouts when we break above a level. And I'm trading against that behavior. So when that news release hit, we shot up. It just gapped, so to speak. And what did that tell me? It told me, number one, we found the liquidity. We are now taking out shorts. Anyone who's shorted up here from London session or, higher up are going to have certain amount of stop loss corralled above that high because that's human behavior, which is what I'm trading against. So when these shorts get taken out, they become longs. They also free up liquidity there. So when they become long, I can enter a short because for every long, there's got to be a short. It just makes logical sense. This is how the markets work. It is a liquidity seeking machine, but it is also just an auction. For every buy, there's got to be a sell. So you had all this flow happening here, but price didn't shoot up. Why? Because somebody was sitting up here, a lot of somebodies, me being one of them, was sitting up there absorbing all of those orders. Really what it boils down to and why they call these footprint charts, I think, this isn't the actual reason, but look, you're looking to see the footprint of the hidden entities that you can't see with order flow. Order flow is just buys minus sells. That's all it is. It's not a strategy. It's just a confirmation thing. I want to know, are people smashing long here on this breakout more than short? If the answer is yes, then somebody's filling them on the other side. It is big limit order sitting up here, just absorbing all of that. And that, my friends, is an A+ Mona Lisa, Michelangelo's David of trades. Pre-market plan. I know I've said this. I'm going to say it again so I'm blue in the face. Obvious levels. Then it's waiting for the market to confirm my idea. I showed you my ideas. I posted in Discord 30 minutes before it happened. Market did exactly what I wanted it to do. I had the discipline and the patience to wait for that newsprint to happen. Saw the trap traders, saw that fast move through the levels, saw that candle wiggle where they just can't go any higher because they are being filled on the other side. And it was a beautiful trade. And this happens so often in these markets. Like I said, fake outs happen more than breakouts. If you're not trading liquidity, you are the liquidity.